Hey Cole, how you doing today?
Doing fantastic. How you doing, Nick?
Good. That was awkward for me. It's usually a Dave in there, but Dave is off today, and so we got a stand-in, Mr. Cole Williams, who's been on the show a couple times as an associate advisor here at SRB. We are glad to have him. He is going to school me and us on some student loan stuff.
Yeah, obviously a really big, pertinent discussion for the last couple of years. Been in the news a lot for forgiveness. Is there going to be forgiveness? Is there not going to be forgiveness? Everybody's got them. It's definitely worth having in the realm of financial planning for sure because everybody's got them.
So, yeah, the government has been trying to make some headway in cleaning up some of the student loan stuff with forgiveness and things like that. But now there's battles in the Supreme Court. And so, it seems like every day there's something new in the student loan saga. And what's also interesting to me is we're seeing people have kids later and later. And so nowadays I have people showing up at my door talking about retirement. And oh, by the way, we also got to get the kid through school and like how do student loans and things like affect them and their planning. So retirement planning while planning for college is a new interesting dynamic that we're seeing a little bit more of lately than I've seen it certainly in my career. So it's all interesting, good, useful information. So, Cole, if you wouldn't mind, just kind of give us a rundown of what's out there in the student loan world and kind of how some of these things work.
Sure. So there are four basic financing options that are generally speaking available to everybody. Three of which are at least partially subsidized through the federal government, and one exists in the private sector. So first of all, you have your subsidized loans, which are generally available to all undergraduate students. So what makes it subsidized is that you can take out the loan, and as long as you are meeting the education requirements, I think you have to maintain a certain GPA, you have to take a certain number of credits. As long as you can maintain those standards, they will cover the interest payments while you're in school. The second is unsubsidized, which is the exact same thing, except the interest accrues while you're in school, which is obviously not as beneficial. And then the third is you can do the Parent Plus loan, also also scheduled or also subsidized by the federal government. But one really big misconception with this for a lot of clients and a lot of people that I've spoken to personally is that the Parent Plus loan isn't like co-signing on a car for your student. It actually puts you as the primary party that is responsible for paying back the loan.
Yeah.
And then the third is obviously you can seek funding in the private sector through a lot of places like SoFi that are willing to provide that funding, especially if you're looking to pursue like graduate school, tends to be a place that a lot of people look for that kind of funding.
Sure. So, just from like a general education point, one of the things I know if Dave and I have brought it up on the show before, but like the goal for student loan financing, because surprisingly or not, they will let you just rack up as many loans as you want for the
Mm-hmm.
most part. Like, I'm sure there's some, there's some stopping point where they say no, no more, but it's a lot higher than what most people realize. And kind of our goal with clients and having conversations around, how to help kids, how to think about it is to think of it in terms of like what is the average salary of the degree you're going into, like what is the average yearly salary. You want to be somewhere around or less than that in student loans, right? So if you get out of school and the average salary for a social worker is 50,000, you're going to social work school, your debt load probably needs to be $50,000 or less in order to make sure that you have enough money to pay your loans, you don't get into trouble, things like that, right? So what's hard as well is we have what's called student loan forgiveness now, and theoretically everybody qualifies for this. It's just a matter of if you're in the public sector, you can get forgiveness after 10 years. If you're in the private sector, it's 20 or 25, depending on the loan and when you took it out. And so there's this thought process out there that you can take on as many loans as you want and eventually they'll get forgiven. And while that is currently somewhat true, like we are starting to see the first people in the last couple of years actually get that student loan forgiveness. That's a big part of what's going on in the Supreme Court and politically right now is this something that we can do? And so it's a little bit trickier than like, hey, this is going to be the case going forward, right? Like I can't imagine you've got you got 20 years to pay on this loan. Like something's probably going to change between now and 20 years from now. Like
Sure.
betting on that is probably, pretty risky bet if you think about it. So why don't you kind of walk us through a little bit about, student loan forgiveness and repayment plans and kind of how to think about that, Cole?
Sure. Well, there are, I guess, two primary ways that basically anybody can access the student loan forgiveness, which you mentioned. First is through the income-driven repayment plans. That is effectively if you've actually been making legitimate, solid progress and consistently been making payments for anywhere from 20 to 25 years, you can have that forgiven. Obviously, the
Mm-hmm.
thought process from the government standpoint is that you don't want somebody to be paying student loans for longer than that because it's obviously a massive burden for people. So in theory, the federal government stepping in to try to help subsidize at least the back end of those loans. The second is the Public Service Loan Forgiveness Program. This is specifically for people who are, in theory, going to be obviously acting in the public need, the public good, nonprofits, people who are working as teachers in low-income areas, people who are in the healthcare profession, also either in nonprofit or in low-income areas, people that are taking their skills and probably taking a bit of a pay cut. People are able to qualify through these if they can make 120 qualifying payments. So, 10 years of making consistent payments, you can achieve some of that forgiveness.
Yeah. So walk us through, if you can, like how do some of those income driven repayment plans work?
So, to my understanding, I think that I want to say you have to be able to achieve basically just consistency in the way that you pay it. I don't know if there's an exact threshold off the top of my head for how much of the loan has to be paid down or what kind of institutes like a minimum monthly payment you have to make on that. I believe that might
Mm-hmm.
be on a plan by plan basis, but do you know more about that?
So I know there's several different plans. The one that's kind of been in the news lately is the SAVE plan. And
Mm,
this isn't a perfect science. They're kind of complicated, but it equates to about 5% of your income is what you end up paying back.
sure.
And so all student loan repayments are 10 years, right? Like if you get a student loan, your repayment is based on 10 years.
Mm,
That's the amount that you pay to, and with the interest to pay it off. And so how the income driven plan works is if you're, so let's take the example of the SAVE plan. I think the other plans are 10%. But the SAVE plan, so 5% of your income is lower than what your 10-year repayment schedule would be, you would pay the lower payment, right? And then obviously you're not going to be paid off in 10 years. So whatever's left over after 10 years is what gets forgiven, right? But you also got to think of it in terms of like if your income goes up, that payment is eventually going to go up to where you're going to hit the point of like you're paying more than the 10-year repayment schedule. So
sure.
it doesn't work for everyone. Obviously depending on the size of your loan and your income, you might not be able to sign up for one of these because your income would equate to a larger payment than the 10-year repayment cycle. And so, if there's some complicated factors to it, and so we'll see what happens with the SAVE plan. And a lot of people switch to the SAVE plan and they're kind of like stuck in limbo right now. I was
Hmm.
actually just listening to a podcast this morning where basically what they said was like the Supreme Court came in and they haven't made a decision yet. And so the government, as a response to that, basically stopped all payments, stopped all interest, but it doesn't count for your 10-year or 20-year student loan forgiveness, like those months that you miss. And so it could be 12 months before they figure this all out. And so you're basically wasting a year of getting this paid off. And the other thing that's troubling is that right now you can't go in and change repayment plans. Like if you're in that plan, you're basically stuck until they figure it out.
Sure, sure. Well, and it's, I guess, general financial advice is that you don't want to put yourself in a position where you're financially at the mercy of the government. I mean, that's always a difficult
Right.
spot to be in. It puts you in the crosshairs of political conflicts and actions, and there's just so many things that are out of your own control, which is obviously one thing that we really want to help our clients avoid.
Yeah, I mean, and that's where we go back to that basics of like, hey, try to get out of school with as little debt as possible, obviously, but also
Mhm.
like set yourself up for like at least 1 year of salary or less, and then based on that, it should be pretty reasonable to pay that off over like a 10-year time frame, if not faster, right?
Sure.
And so, but it's challenging. School's expensive, and not everybody's prepared for that, and so you have to be careful because my biggest gripe about student loans in general is nobody explains to you what this means in the future, right? All they
Yes.
tell you is,
Yes.
hey, you come in here, we'll give you money, and
Hmm.
eventually, don't worry about it now, but like eventually you have to pay it back, and we'll figure it out then, right?
And it'll
And
be an amount of money over a period of time, and it's fine. Yeah. Yeah.
nobody's like, hey, this is how much money you're going to make. This is how what your student loan payment is going to be,
Hmm.
and it's about 30% of your income. So good luck trying to do anything else, right?
Yeah, exactly. Well, and I think that without getting too political, it does make sense that obviously we want to try to provide people with the most opportunity that we can. But when you think about if you were to be 18 years old and go into a bank and ask for an SBA loan for 200 grand, you get laughed out of the building. But you can
Oh
go
yeah,
get $200,000 to go, to Colombia or whatever, no problem. Like that's totally fine. So
right.
it's a weird situation that we're in.
Well, and look at, one of the biggest financial crises that we've ever had with the whole mortgage, subprime mortgage. Basically, that same thing was happening. You walk in somewhere and they would give you a bunch of money and not verify or do anything. They just give it to you. And turns
Hmm.
out that didn't work out very well in the
Yeah,
long run.
yeah, not so well.
And I think the other thing too, I saw it on your list here that you sent me earlier, but the thing that they don't tell you is like you can't run away from these, right? Like you can't
Hmm.
go bankrupt, you can't like ignore them. Like this thing will follow you around for the rest of your life.
Oh yeah,
So you have to make a plan for how you're going to deal with it. Hopefully
yeah.
before you get the loans.
Well, and by no means are we, advocating for people to even attempt to file bankruptcy, and except for extreme circumstances. But basically, the only way that you can get these things wiped out through bankruptcy is if you can prove to the bankruptcy court that you have, it's called undue hardship, which
Hmm.
is almost impossible. Like basically, the criteria for you from a legal standpoint is you have to advocate that it's pretty much impossible for you to be able to do that.
Yeah.
Which the court's going to really dig through your finances to see if it really is even remotely feasible. So it's
Hmm.
very, very difficult to have that happen.
Yeah, another point that I saw on here too that you had was just kind of relating towards thinking about in terms of public versus private student loans, right? Because there is a difference there. And there's a lot of companies right now in the private space, like SoFi and some of those other ones, where they give you a little bit better interest rate if you refinance and consolidate. But a lot of times the terms are very different in order to do that. And what they
Sure,
don't always disclose to you, or sometimes gets lost in the shuffle, is you lose out a lot of the benefits by going with a private student loan versus a public student loan as far as
sure.
forgiveness and things like that. And once you turn on that switch, you can't turn it off, right? Like if you consolidate your loans privately, you can't go back and decide you want to make them public again.
Yeah, doesn't work that way. Yeah. Yeah, and I guess it's worth mentioning too that obviously, like in any sort of financing situation, there is the opportunity to refinance, which can be really good. But we're in a bit of a weird situation where, especially over the last 15 to 20 years, rates have been really, really low. So if you are a student who's graduating now, or if you have a student who's graduating taking on loans, there's a pretty good chance that it doesn't really make a lot of sense for you to refinance right now,
Right.
unless maybe there's some sort of way where you had private loans in the past at a really terrible interest rate because maybe you had a really rough credit score and it's gotten better. There are some circumstances, but refi for a lot of people probably isn't on the table right now.
Yeah, it's interesting because only a couple of years ago it did make a lot of sense, but now all of a sudden those 4, 5, 6% interest rates look really good again.
Yeah, no, exactly, exactly. So, so yeah, but yeah, well,
You
I was
want
gonna
to tell us a
say,
little bit more about the repayments and like how we can, like, let's say forget about the student loan forgiveness, just attacking it from the standpoint of like, hey, let's put some extra money on this. Like, how do you think through that? What are some of the benefits of thinking of it that way?
yeah. So, what is true with student loans and basically any sort of loan is that obviously making additional payments decreases the amount of time that you have to pay off the loan, which is great. But what a lot of people don't really understand is that it isn't linear. It is something that compounds. So what I did is I found the average loan balance of any undergrad in the country. Actually, I believe the number I got is for just kind of like your average American, which right now is $38,000. The average interest rate at the moment for the subsidized loans is 5.5%. And we just attached a $300 monthly payment to that if you were going to follow that schedule.
Hmm.
So in doing that, it would take you just under 16 years if you wanted to pay off that loan. You'd be paying about $19,000 in interest. Now, if you were to increase your payments by 50%, so you make it a $450 payment, you'd be paying off that loan in 9 years with only $10,000 in interest payments. So if you are somebody who's getting out of school and you are prioritizing, I want to be able to purchase a home, I want to be able to free up cash flow to invest in my retirements, or any other financial goals that you have, even making small changes to your payment schedule can have a really, really big impact on how quickly you can get out of that debt.
Yeah, that's a great point. And I think of it in terms of like if you're a parent too and you've got a kid with student loans, like maybe that's something that you think about of like helping them. Like you pay the base payment and I'll throw an extra couple $100 on it that goes towards the principal. I think that would be a great way to help out without, just taking it on yourself.
Yeah, well, I mean, I'm sure we've all heard the stories of people who, have been paying student loans for decades sometimes. And though it isn't always a, you made a bad financial decision type shame, shame, shame thing, but, I hear from people who have really high paying jobs that kind of tell that same story. And I'm thinking, well, like what kind of payments have you been making for 30 years if you really haven't paid off this loan that you have in this time, right? It's like, if it really was a big priority for you, you probably could have found a way to free up some cash flow to do that. But at the same time, I guess if you are living the life that you want and you're financially comfortable and you're able to find cash flow to do the things that you want to do, then I guess as long as you aren't defaulting on the loan, not that you can default, but as long as you're staying current on your payments and stuff, if that works for you, cool. But those sort of people are definitely the exception and not the rule.
For sure. Yeah. Yep. More money, more problems, right?
Exactly. Exactly.
So I think like the main takeaway of today is, student loans aren't necessarily as easy to understand as maybe we would like them to be. And you really want to go in like eyes wide open around like figuring out where you're going to be, having that conversation with your kids. Like, hey, if you take out this amount of money, this is where you'll be at the end of 4 years. And this is what that repayment looks like. Like we've done that with a lot of our kids, a lot of our clients' kids before, just having that conversation. We've even gone as far as like, hey, let's think about, okay, you're going to be making 50,000. Let's do a budget, right? Like, well, here's your student loan payment and then what's left over, so they can really think through like, is this the best thing for me? Is this where I want to be in 4 or 5 years? Right. And those are the conversations that I wish like were mandatory when it came to going to school and getting student loans that they're not. Right. And so, and
Yeah.
it's not anything about like one particular kid or these people with massive student loan rates or amounts are not smart. They didn't make a good financial decision. The reality is they didn't know, number one, and number two, I don't know any 18-year-olds that make good decisions. So like
Hmm.
giving them the financial ticking time bomb and asking them to think that
There
through
you
is
go.
pretty rare, right? Like I can tell you stories of student refund day where my friends, who had student loans got extra money that they just blew instead of paying the loan back. They
Yeah.
went out and bought DVDs and cases of beer and all kinds of dumb stuff, not thinking about like the amount of cost when you factored in interest rates and things like that for that extra money they got back.
Yeah.
So like
Yeah.
it's just the reality of when you're 18, you make a lot of silly mistakes.
Yes, you do. You absolutely do.
So, yeah, have conversations with your kids, reach out to your financial planner, do the budget exercise. These are all great things to think about and to do so that going in like what that outcome is going to be and you're making the best decision for you.
Yep, couldn't agree more, especially on the budgeting standpoint. I think if you can be able to lay out for your, college student or recent college graduate, like you said, we're making 50, this is what the average, apartment costs, is groceries. I mean, because I think a lot of college students really don't make a budget until you become an adult, and frankly, a lot of people don't even make a budget anyway, which is a big problem.
Yeah.
But but if you can really lay out on paper or in an app and you can show like, hey man, like this is how much money you're going to make and this is how much is going to be left over when everything is said and done, that definitely can, I think, have a positive impact on the career decisions we make and on how much money we're going to take in loans.
Yeah, absolutely. And I don't want to like scare anybody away from going to college or anything like that because I don't know a lot of kids that go through college, become adults, and we're like, man, really wish I wouldn't have gone to school those 4 years, right?
Yeah.
Like maybe they wish they did a little bit differently, or how they financed it, or
Did it
looking at
more efficiently.
alternatives.
Did it in less
But
time. Yeah,
I don't know anybody that's like, man, that was just, a waste of my time, no fun at all, that kind of
exactly.
thing. So there is a way. You just got to have those conversations and figure it out. And it takes a village, right? This is not just a small family problem. This is a countrywide problem that hopefully we'll get some resolution to here in the future. So,
Yeah, absolutely.
with that being said, if our listeners have any questions about student loans, you can feel free to email us at info@srbadvisors.com. We will put Cole to work doing some research on getting some answers back to you. And as Cole, it's been a pleasure. Dave, better look out. Better not take too many vacations. I can see you becoming a regular here on the show.
Well, I love coming on. I appreciate you having me.
Thanks, Cole. It's been fun.
This is a Zedia Media production.